Today's video is brought to you by Kartra. Kartra offers everything you need to run your online business all in one place. To learn more about Kartra and what it can do for your business, make sure to click the link in the description. So, do you need to wait before you start paying down your loan faster? Or is there any specific period of time that you just kind of have to hold off before you start sending in extra payments or even chunking doing the velocity banking strategy? Okay, that is a fantastic question that came in from one of our subscribers, so we are going to tackle it in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you are new to the channel, make sure to click subscribe and click the bell so that way you get notified on any and all of our future content. So in today's video, we are going to be discussing, do you need to wait before you start paying down or sending in extra payments on your loan? So either your mortgage or your student loan or your auto loan. Do you have to wait before you start, paying this thing down faster? And this is a question that came in directly from one of our subscribers, and I'll put that up on the screen here. And as you guys know, I always love to help out in any way that I can. And as you watch different trainings, obviously all over YouTube, but as well here on this channel, if you see something and you have a question about it, definitely put those questions in the comments. I say we, but me, I look through the comments, I look through there and my goal is to answer as many of those questions as possible with video. And so again, don't be shy, don't be afraid. If you have a question, get that in there so that we can get that question answered for you. And once you have the answer, then you can move forward in whichever direction you choose. Now, back to this question here, which is, do you have to wait before you start paying down your loan? And in general, the answer is no. Okay, so again, depending on your country, again, there are going to be some countries where no, you just simply can't pay down your loan any faster than the scheduled, mortgage or loan terms. In some countries, that's the case. In other countries, there might be certain limits or certain amounts that you can only pay down your loan by X percentage, per year. And we see that, for example, up in Canada, where you have what's called a prepayment privilege, where you can pay down your mortgage by, let's say, 10% of the original loan balance, but that's the cap, that you can pay it down by within a given year. Otherwise, you have to pay a penalty. But here in the United States, and really in most scenarios here, there are no prepayment penalties, there are no prepayment limits, and in most cases, there's no waiting period. So let's say you got your auto loan yesterday. There is, in most cases, nothing saying that you can't start paying it down today at an accelerated rate. So, a good example would be like, let's say your mortgage. Let's say you just got your mortgage and your next payment is going to be due at the first of the month coming up here. Right when you make that first payment, you could immediately follow that payment up with an additional principal payment. When you make that very first payment, you could add extra principal directly to that first payment, allowing you to, again, pay down that principal balance of the loan, which will save you money in interest over the life of that loan. And one of the key lessons and one of the key, cogs of this YouTube channel is we're always talking about the interest. We're talking about lines of credit. We're talking about loans. And we're talking about how expensive loans can really be. In most situations, we're only taught to think about that monthly payment, and we're not looking at the back end cost. And what we know is that, and I hate to use the term front loaded because that's not actually true. The interest on a loan isn't technically front loaded. In some countries it is. Okay, and as we unveil some of our additional international videos, you'll see that in some countries the interest is absolutely front loaded. Like you're absolutely only paying interest for the first several years of your mortgage and not knocking down the principal at all. But again, not the case here in the United States. But regardless, the interest is heaviest at the front of an amortized loan. So for example, let's say you had, a $200,000 mortgage, and let's say you had a very high, 6% interest rate on that mortgage. And again, I just use that number because it's right off the top. And on that monthly payment, your payment will be roughly $1,200, but only $200 of those dollars is actually going to the principal. About $1,000 of that very first payment is going to straight interest to the bank. And so that's a problem. I mean, and that's really the trap that a lot of people get in when it comes to long-term loans, especially mortgages, is because you'll pay on that loan, minimum payments for the first 3-4 years, and then the bank's going to call you and say, hey, we've got a great deal here for you to refinance, and you're like, yes, that's going to lower my payment by $50 a month, but it brings you back to the beginning of the amortization, where the highest percentage of your payment is going to straight interest to the bank. So no, in general, there are no waiting periods in which you can start applying extra principal payments or start applying chunk payments to your mortgage. And the truth is that the earlier you can start this process of paying additional principal or chunking, if you're going to do the velocity banking strategy, the earlier you can start that, the more interest you will save over the life of the loan. As we know, those first, really 3, 4, 5 years of an amortized loan, that's where you're paying the highest percentage of your payment in pure interest to the bank. And so if you're able to either A, make a large principal payment right away, that's going to, again, lower the principal balance of your loan and drastically reduce the amount of interest you pay over the lifetime of that loan. You're going to knock months, if not years, off of the lifetime of that loan by applying additional principal at the beginning of the loan. Now, will you still save money? Like, let's say you're 15 years into your loan and you want to start making additional principal payments. Will that save you interest? Absolutely. Okay, yes, it will still save you interest. But again, if you're able to start knocking down that principal balance at the beginning of the mortgage or at the beginning of the loan, you will save more interest in that particular scenario. So hopefully you guys found value in this training and in this discussion. Again, you can absolutely start making additional principal payments, definitely on your mortgage, here in the United States, as soon as you can, as soon as you want to. You can start applying additional principal or start making chunk payments. Again, you're going to want to look into it if you're in a different country. You're going to want to take a look at either A, if there's any limits to how much you can prepay in a given time frame, or B, again, in some countries, you're just simply put unable to make additional principal payments. So if you're not here in the United States, you'll want to look into that before you just send the money in to your lender. But I'm definitely curious to hear what you guys think. Do you think it makes sense to pay additional principal towards your loan at the beginning? Or do you think it makes sense to just kind of make those minimum payments for the duration of your loan and do something different with the money? Okay, that's definitely love to hear what you guys think about that. Make sure to let me know in the comments, and I will see you in the next video.